So today I had an aha moment. Most traders aren't losing because of the bad entries. They're losing because they keep waiting for home runs and they turn good trades into either break even or losses. And today I didn't take a lot of trades. I only took like one or two trades. But what I did was I went through all my trades for the past 2 months because I take a screenshot of all my trades in the past 2 months. And then I realized there was a lot of unnecessary break evens and there was a lot of losses. So I'm at a break even stage in my trading journey. I've had some payouts, I've blown some accounts. I I I had big I had accounts that I flipped from 1,000 to a couple of thousand, then I blow it. And what I've noticed in looking at all these screenshots, because every time I take a trade, I take a screenshot of it and I write down all my everything. I write down the entry, the reason, my emotion, the exit, the break even, everything. I keep track of all my trades. I keep it very personal. I keep it in a Google slide. And I kind of went over it in a couple of last videos of anybody wanted to do it the same way. And I came to this conclusion that if I take more base hit trades, it'll just change the game for me. And when you get into trading, you start accumulating lots of bad habits. And I just realized one of the bad habits that I have was always looking for hitting the home run. Constantly in the back of my mind, I'm looking to hit a home run. Because once you get on social media and you start following and looking at all these traders that they post their trades, it's all home run, home run, home run. Nobody really shows their losses. Nobody shows their base hit because base hit it it doesn't look sexy. It doesn't look cool for social media. But if you go through all your trades and all your break evens and losses, you realize that there is a lot of base hit that you could have hit and move on for the day. And once I did the math, I was like, oh my god, I could have made so much money just hitting base hits past 2 months instead of just constantly looking for home runs. And I'm going to pivot my trading. So I'm gonna show you guys lots of base hits from now on, and I'm going to take a lot of base hits from now on. Yeah. So let's get right into it. So, for example, this was like the prime example of why you should take base hits. So today, when I was coming to the chart, I saw this. I saw we were going up, but I knew that we have to go either hit this daily indication. Oops. Hit this daily indication or at least go touch the daily gap. So I knew we were gonna hit one of these two, either this one or this one. So when we were going up, I was monitoring the price. Around this area, when the price closed, I started looking for entries. So I put my POI in there, and I went down to 1 minute. Yeah, it was right here. Just get rid of that. And it was right around here. So as you can see, I trade something called ICC, indication correction continuation. And candle continuation theory is the entry model. So this candle kind of closed all the way down, show us an indication this was the correction. I actually traded the correction, but I got out of that break even. And then in here we closed above this POI. We not only closed below it, we not only flipped this candle, we also had an inverse for value gap. So this was an A plus setup. So I took this trade. I took it somewhere around here. I put my stop loss right above the fair value gap. And of course, I went for the jugular. I was like, it looks like it. By the look of it, it looks like we're gonna go fill out this gap today. Of course, we didn't. So this one was break even, and I'll show you why it was a break even because I do pay attention to ES. If ES does a strong pull, it usually carries NQ with it. So the price start tumbling, start going down. Put my stop loss to break even, and then it was around this area that on ES. Let me see if I can. So this was my entry. Oh, I'm sorry. This was my entry. And as you can see, ES came all the way up here, broke through all both of these swings. So I was like, maybe it's one of those days that we just come up, get choppy, take this price, and then go down. Because we were like aggressively coming up on ES. And as you can see on NQ, when I put my stop loss at break even, I start seeing this. I start seeing this going up. So I put my stop loss right around here. So right around this area. And as you can see, the price came and tapped me out, went down, didn't make a new low, and it started going back up again. So I was like, you know what? I'm happy I didn't lose any money because by the look of it, it looks like we're gonna go and we're gonna start changing the trend. Came up, hit it, and went down. And this is how I could have avoided this. So I could have just get in right away, and then instead of aiming for all this down, I could have just aimed for this most recent swing. Could have just aimed for that. Just a quick base hit, still at almost a 2.68 trade. No reason to aim for all of these. Or I would have bought with more contract. Let's say, for example, instead of buying with 5 contract, I will buy with 8 contract. I would take 5 out in this area, leave the rest at break even, and see if the other 3 is gonna hit. And that's that. And I put that in practice later in the afternoon. So I was at work, I was very busy. So here on the hourly, as you can see here, Asia opens when we go up. So I draw my line. This one closes too. I'm just waiting. I set my alert. Alert on candle close. I set my alert. Price hit it. Go down to 1 minute. Price hit it. We close below it. Oh, for people who are saying it's break and retest, it's not break and retest. Break and retest is literally is like touching with a wick and then continue. It has a very high rate of failure. The break and retest, this is different. So with this strategy, the candle has to close below the POI. So this was an A++ setup. So, and it was a base hit. I could have target higher liquidity. I could have target here and here, but I didn't. I was like, you know what? Let me just put it into practice. So we close and then we close. So we got, this is A++ setup. So we close above the POI. We have inverse this gap. This is beautiful. So I got in and I was so confident that I put my stop loss right around here. I was like, if you're gonna go hit this base hit, we shouldn't come and visit this. And I'm glad I gave it some room to breathe. In the past, I would have put it right below the fair value gap, which if you saw, it would have been tagged out. So I put it right here. Well, technically, you're supposed to put it here because that's the point of invalidation. But I'm like, if I'm going for base hit, I don't want to like put it all the way down here. if you're bullish at like after a 100 tick move, we should continue to go and hit it. So the price went up, create another indication, this is a correction, and then continue to hit it. And in the past, I wouldn't be super happy with it, but I was like, this time around, I was. And then when we came down here and started going up, I moved my stop loss right around here, right below this most recent swing low. So technically, the stop loss was here. Then I didn't touch it after. When it got around here, I put it at break even, but that's besides the point. That's still at 3.0. And in the past, I would have easily passed on this trade because if you can see, it's only 84 ticks. But also your risk is so tiny. It's like 23 ticks. That's like nothing. And if you stack up all these base hits, and the strategy is very simple. I'm at the point that I don't have any issue finding the direction and finding my entries. I have no issue. That part is very easy for me because I've seen the market doing the same thing over and over again. Now I just have to take more base hit and build those base hit on multiple accounts. And I keep switching in between the accounts. So once I have enough confidence in this strategy and the base hit, I'm gonna start linking all the accounts together. On gold, I believe you had multiple opportunities. And gold always moves like this. Gold, it always consolidate, and just shoots up. That's just how gold moves. If you look at the gold past like a year and a half, it's always been moving like this. Once it moves, it barely gives you any opportunity. Tonight they gave you a decent opportunity if you could have hit it after market opened. So this was today. Let's say this is 8 a.m. candle. This was, I believe, one of the opportunities that could have been hit. There it is. So yeah. So you could have taken this trade around 824 pre-market and it would have hit that liquidity right there. There you go. And you can just wait for it. You gotta wait for this one. But this one it would be this one is a true break and retest, but it has a very high chance of failure. And your risk to reward ratio is not good either because you have to put it at here and here and here. That's 0.82 risk to reward ratio. Not good. So that's why break and retest doesn't work, especially when it comes to your risk to reward ratio. There it is. So around 10:15. So we got another opportunity right here. Another A plus setup. See how like all of these trades, they all look identical. They almost look the same. When you're shorting, they look the same. When you go long, they look the same. It's just the same thing over and over again. But I just have to remind myself to just go for the basic. Don't shoot for the moon. Sometimes, like today, it would have been a good day to shoot for the moon, go for a little bit more. But since I was already in that NQ trade, I didn't even pay attention to gold. But this would have been a good opportunity. Congrats to those who ate, I guess. So candle closes below. We close above it, but we didn't flip this candle range. So once we flip this candle range, a little bit of advanced technique. Once we flip this candle range like this, you can get in right away. Put your stop loss right here, take profit right here. Still a good 2.0. But what I do when I see something like this with a nice, decent fair value gap, I just put my order either at the end of the fair value gap or right in the middle of it for a little bit better risk to reward. So I would have put mine right here, and about 40 ticks stop loss. Pretty good. There it is. Boom. 138 tick. Pretty damn good for a 3.45 instead of a 2.0. So that's how I do it. That's the trade I missed. You had one, two opportunities today. Any other opportunity later in today? I don't think so. You had one more. You had one here if you wanted to hit it. A tiny one, but opportunity regardless. Oh yeah, this is clean. This is the one that I would use psychological number. Like if you're already at the all-time high and your risk reward is very like tiny, you can just target some sort of psychological number. So we closed above the POI, came back, closed below it, and then right away in this first candle we get it because we flipped this candle range and we close above the POI. You just get in right away on this type of like such a tiny amount. You don't do limit order. You just get in right away. Look at that. Risk is 23 ticks, and you can target this area for a nice quick base hit. Even that one is like a 2.48, 57 ticks. If you trade the minis and stuff, micros, that's like $570. It's just pretty decent. Or you can just buy like 5 contracts, sell 3 of them here, and let the rest run to some sort of psychological number. For example, 4475.5. That's a good psychological number. And look, the price reacts off of it. 47755. Like as soon as he hits that psychological number, start dumping. That's how. That's why. That's why when I say there's an algorithm to most of these assets, a lot of people don't believe it, but there is an algorithm that's running most of these trades. And once you see it, you cannot unsee it. And they also move at a certain time, which I'm not gonna get into it in this video. Maybe in the future. There we go. So this was the one. So the market opened, open, and then I'm just marking my POIs to see if the price is gonna hit. And around this area, I was busy. I couldn't take this trade, but this one would have been a perfect trade to take. I was busy. Look at this. This is just textbook. We came, closed below the POI right away, closed above it, flip the candle, and close above it. You get in right away on this type. And then you just target here. Look at that, 138 ticks. On a mini, that's $1,000, $400 almost. On a micro, on the 5 of them, you still make like $500-600. Even on one micro, that's still 138 times 5 or 6 accounts. You do the math. And then every time we make a swing low, I just move. As soon as we make the swing low and it start going up, somewhere around here, I will put my stop loss to right below this swing low. And then you just let the price do its thing. I hope by now start to see it better and better with every videos that I'm making and my thought process behind this. So that's it for today. Hopefully it was helpful. That's my trade recap / outlook. And every day I kind of like, if we're at all-time high, I mark some sort of psychological number. For example, I mark 45.50. I'm gonna see if we're gonna hit it tonight or if we're gonna go down and then come and hit it and then go from there. on NQ, we have a lot of target to come and hit. We have to fill out this daily gap. We have to hit this daily and 4 hour indication. We have this daily and 4 hour indication. So I'm looking for shorts for tomorrow. But you'll never know. You don't want to trade what you think. You want to trade what you see. If tomorrow morning I wake up and I see the price is just soaring towards the upwards, I'm gonna go long. We'll just have to see what the price gives us. And join the community. We're growing like crazy. It's over 500 members already. People are posting their wins. I love it. And yeah, if you have any question, leave it down below in the comment. Love and peace. See you guys in the next one.